I just got one big question, okay? Que pasa? What does it mean? You know, the Davos, Switzerland, the IMF says we're heading into the worst financial headwinds since World War II. So your global macro, what does that mean for the world, Raoul?
This is about as macro an environment as I've ever seen. World War II was a fascinating period because, like COVID, the entire world had basically been stuck at home or been on, on battlefields. Everyone came back. There was no supply of commodities and goods. Global supply chains were broken, and everybody came back and started consuming again. And guess what? Inflation went up to 13% or something, maybe even higher. And that period was fascinating because interest rates went up, and the first thing that happened was the economy went straight back into recession, and rates and inflation went negative. Because it was a massive tightening of monetary conditions. You raised the cost of goods on people and didn't raise their salaries enough. People couldn't get the goods that they wanted, exactly like now, and everything collapsed. So we went back into recession, and then eventually some better times. And I'll come back into the 1940s and 50s because I think it's a really important parallel that most people misunderstand. The next time we saw anything remotely like this was 1974. A lot of people tell you it's the 70s again, inflation. Well, the inflation episode we had in the late 70s was driven by demographics. That was the baby boomers entering the workforce all at the same time. It was the largest demand shock the world had ever seen. And we had a supply shock of these oil crisis of the Arab oil embargo. That's not repeating now. What is actually more similar is 1974. 1974 was the Arab oil embargo. The price of oil tripled, and interest rates went up, inflation shot up, and the immediate effect was the economy went down the toilet.
The world economy is going to hit the biggest financial headwind since World War. What can you do? My whole fascination is why are some people rich and why are some people poor? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. But a lot of the times, the people that are getting poor is simply because they had poor teachers. Their parents are poor, or they come from a poor background, or like in my case, they're all school teachers who think even a PhD, that's all you need. Now we have so many Americans without that government stimmy check. We're finished. So in 2020, I'm not a Republican or Democrat, I'm not endorsing Trump, who's a friend of mine, or Biden. I'm saying communists took over in 2020. The fractional reserve system and bank reserve currency, which is macro, that's where the heist took place. So that was Social Security, everybody's now on Medicare, welfare and all that. We're now a welfare nation.
And inflation fell in 1974 afterwards. People are still thinking inflation goes on forever. It did not, and it did not in the 1940s either. 1984, we saw an issue where global trade, there was a huge amount of trade disputes. The dollar was pretty strong, like it is now. Interest rates were going up, and inflation was high. And everybody was fearing, looking back and saying, oh, we don't want the early 80s, late 70s again, the inflation. So Volcker was tightening rates too much, and the economy collapsed. It didn't go to recession because the Fed quickly started cutting rates, but the dollar went up a lot more and created a lot more problems. We ended up with the Plaza Accord in 1985 when everybody had to stop the dollar going up from destroying the global economy. So then the next time we see something similar was 2008. 2008, if you remember, the oil price was at $147. Inflation was 6%. The Fed had been cutting into that because the economy was imploding. 2018, exactly the same. Oil prices high, inflation high. The Fed were hiking rates, trying to tighten the balance sheet. And what happened is the economy rolled over really quickly again. Okay, so what's going on here? Why does this phenomena keep happening? Everyone extrapolates inflation out forever. What actually happens is that consumption falls because we've tightened monetary conditions.
Let me just say this much. Markets go up and markets come down. It's coming down. And then we're going into depression, and then we go into revolution. Depression is when more jobs are lost and they're going to have to print more money. Just as they did to prevent when Fauci, fascist Fauci, shut down the U.S. economy, the whole world economy shut down. America is now the largest debtor nation in history. Student loan debt is out of sight. Consumer loan debt is out of sight. Stock market is all based upon debt. I don't know the exact numbers, but I think we're pushing the debt to GDP ratio. Okay, with the debt to GDP, it's really simple. When debt to GDP hits 90%, so we have 90% debt to GDP. That's pretty optimal. That means every dollar you borrow, when it's 90%, the economy grows by 10%. So it's a 10 to 1, a 10% ratio. Today, the debt to GDP ratio is 140%. They cannot add any more money to it. It's not going to grow. That's what it means.
Tightening monetary conditions to ordinary people means the cost of your mortgage has gone up at the fastest pace in history. Over a 1-year period, mortgage rates have never risen this fast. So any money you borrowed has suddenly got much more expensive. Your wages haven't kept up with the cost of just basic services like food. So you're actually feeling poorer. So you can't consume as much, and you start not consuming other things. People overextended on housing because they rushed into housing in 2020 and 2021, and the rates have gone up for them. Also, just the rise in things like the cost of oil has meant that gas prices, all of this stuff, and then the rise in the dollar, which is a monetary tightening. All of these things get together would suggest, and I put them on a chart, it suggests that the ISM is going back to 30, which is as it was in 1974, which is a terrifying fall. Now, it's suggesting that if we're not careful, we could have a very sharp, nasty recession, meaning kind of a negative 5% GDP recession. It might be short, depending what the Fed does. So we've got the setup that we've seen many times in the past. We've got the forward-looking indicators, this monetary tightening, suggesting we've got some real pain to come.